Is your business providing fringe benefits to employees and needs to launch a fringe benefit tax return by the end of April every year? Fringe benefit tax are entitlements or benefits provided to employees of a business, for example, like the usage of a motor vehicle for personal purpose or access to subscriptions like gym memberships, or benefits that are like usage of a car, business card for the purchase of personal expenses or paying personal bills. These are usually fringe benefits that are incorporated in an employment agreement. When hiring an employee, the tax in these fringe benefits is calculated by the company and paid by the company on behalf of the employee. There has been a recent court case ruling in which a lot of the point of view from the ATO has been reversed, and the full federal court agreed that employees are very specific and can be characterized for having a pay slip, receiving salaries and wages, having an employment agreement, and so on. However, directors, shareholders, or owners of the business do not usually fall into this category, because as director we sometimes just have the ability to use a motor vehicle that is available for us to use because we are the directors or the shareholders. The point of view of the federal court is that the fact that you are a director doesn't make you automatically an employee, and therefore fringe benefit tax is not automatically applied to the benefits that you are taking from the business. So if you are a director using the car for personal use, the credit card of the business for personal use, or the subscription paid by the business on your behalf, these do not automatically will become part of the fringe benefit tax return, but they still need to be treated in a tax compliant manner, either as a distributions for benefits provided as a distribution. They still need to be treated according to the tax legislation, and someone needs to pay tax on that if applicable. For example, a trust distribution to beneficiaries, a Division 7A loan agreement, or a repayment of the dividends of the company to the owners. So this is very interesting. It makes my life a little bit more complex in terms of determining what the business owners are spending and using the resources of the business into, but still we need to launch a fringe benefit tax for the benefits provided to employees, actual employees of the business. So if you're a director, take that in consideration, bring it up to your tax advisor so you can review your circumstances and confirm the correct treatment of the liabilities in terms of fringe benefits provided to yourself.